I'm Tony Conbrock. As I mentioned prior, I run the wholesale sales side of Newrez Wholesale. Again, we have a very exciting presentation for you today. We got some top talent that agreed to join us and come on and talk about second mortgages, why they're so important. And I probably have made a mistake for the last 90 days where I've been talking about a second mortgages as a way to make sure you're protecting your current client base. However, when you really look at the market right now and you look at the opportunities and the people and families in need of debt consolidation and opportunities to really help homeowners out there, when you look at it from an LO perspective, not only is it important to be able to use second mortgages to stay in front of your current client base, your current borrower base, but there's such an opportunity right now to grow your clientele base by going out and looking for those borrowers that need help consolidating. I know it's often thought of as a bank or credit union product. In so many conversations along the way over the last year, and especially the last 6 months, LOs have been a little bit worried of going out and competing with banks and credit unions, but they're more mainstream now in the wholesale channel. Pricing has somewhat caught up with what the banks and credit unions are able to offer out there, but even more so, the service levels that the mortgage broker community provides, along with the wholesale lenders. And in particular, I will say, and you'll hear more here about Newrez's opportunity for you to help your borrowers, but the time and the service that the wholesale channel can provide versus the banks and credit unions. This is the biggest reason of why the borrowers out there are looking to you to help better their situation. All right, now what I'm going to do is I'm just going to introduce our panel and our presenters. David Koop, who is running our second mortgage operations for us. You'll hear about him as we move forward within the webinar. Lori Churs, a top AE nationally, top AE for us at Newrez, but also you have probably seen her name out nationally as a top producer within the wholesale community. And then Jordan Sackett has joined us as a loan officer for First Rate, who has been a top client of ours for a number of years, but just is absolutely knocking it out of the park from a second mortgage standpoint. And I say easily that she has become a second mortgage expert, and she's joined us here to give a little bit of advice on what's making her successful in originating second mortgages. And then lastly, Dana Boom, who has joined us. She is a director of underwriting, and the second mortgage underwriting team reports up to her. And I can't say enough about our operations and our underwriting team and the job they've done in helping us grow our second mortgage origination base since we rolled out a new way to do seconds here at Newrez, what we call Express CES. And you'll learn more about why we call it that as we move forward. All right, let's move on to the next slide. I'm just briefly going to cover a little bit of the statistics. I'm sure most of the loan officers out there right now, the mortgage professionals, have heard and understand what has happened in the marketplace as far as rates are concerned. You have just a record number of low first liens out there from the COVID days, which takes some of the opportunity to do cash out refis, rate and terms off the table there. But that's where second mortgages come into play. People don't want to touch their first. That's fine. Let's get them a second mortgage now, help them out, cut their debt load down, and then when the opportunity makes sense, then that's when you take the first mortgage and the second mortgage, combine it, and put your borrower even in a better situation. Because of what we've seen with people not touching their first mortgages, we have a national all-time record in tappable equity. I'm not sure I can say that word. But there's plenty of opportunity out there from your homeowner standpoint of the equity that they have built out. Again, that's where second mortgages make sense. More than anything, we don't have it on the slide. This is a situation to grow your borrower base, as mentioned, and help your current borrower base out, staying in front of them. Don't let them go to the banks and credit unions where you do have a bigger opportunity where you could lose them in the future and you never get that first mortgage refinance opportunity as you move forward. Again, we talked about it. The demand for second mortgage is growing every single day out there. And this is where loan officers can help the community out and put your borrower in a better situation. Okay, I'm going to go ahead and turn it over to the experts here. So Lori, take it on.
Sounds great. Well, thank you, everyone. Thanks for participating today. I'm so excited to interview my friend Jordan. So, Jordan comes to us from, I believe you're sitting in Anchorage today, but I could be wrong, but straight from Alaska, I will say. Jordan sent us several second mortgage product loans. And so we just want to go through the thought process where she's finding her closed-end second business, how she identifies who needs a HELOC and who needs a closed-end second, and then just really recognize the closed-end second opportunity when it arises. What are the trigger points? So, Jordan, I will start with asking you a few questions. Where are you seeing the biggest closed-end second opportunity right now?
Well, thank you, Lori, for letting me, when I was given the opportunity to come and interview with, I feel like one of my closest friends. I talk with Lori more than I talk with some of my coworkers. So thank you for having me on here, and Tony, David, and Dana. I think, the biggest opportunity as a broker, right, is I love the comparison between the branch style banking versus a brokerage, because we don't necessarily maybe get a lot of in face person contact with just people depositing checks or things like that. So how do you have these conversations with people? I think the biggest thing is, I work on a team with Slavic Lund. He's had his book of business since COVID time, and so a lot of what Tony was talking about, we have a lot of equity rich people, is what I would say, and a lot of people don't realize it. And so a lot of the opportunity that we see is with our current book of business. A lot of us are sitting on this huge database that we're waiting for refinance opportunities, right? And obviously that has slowed down right now. But that doesn't change that these people still have all of this equity, and most of the time don't even know that this product exists. A lot of people are being probably marketed through Credit Karma or, things like that for SoFi debt consolidation and all of that. But a lot of people just don't even realize that they have this equity and it can be used very freely to help them free up their cash flow, consolidate some debt, do the projects they've been wanting to do while they keep the grip on their 3% mortgage. And so I'd say our current book of business is going to be the easiest database to look at.
Nice. Are your real estate partners, are they helping you identify any potential closed-end second loans?
Yeah, so I think the biggest thing kind of overall too, and Slavic is kind of the mastermind of content on our group. So he does very good, and I think that there's a missed opportunity for a lot of loan officers to market not only to your current database but to your agents, right? A lot of our agents, I don't know how it works in the lower 48, but I assume people go to maybe agent team meetings and things like that where they present like, hey, we do VA loans and conventional loans and FHA loans, but do they know that you do these other products? Do they know that you have this availability, so that when agents are oftentimes the front line of, I don't want to say defense, but they're the first conversation, right, with a lot of clients. And so a lot of times if our agents don't know that we offer these products, they're going to steer them away from us before they even get to us, right? They come to us, they come to them for a land loan, and immediately they're like, oh, well, your broker doesn't do a land loan, let's get you somewhere else. And it's like, whoa, do you own real estate? Like, are these the potentially so many different options? And so educating your agents is first. And then absolutely, once your agents are educated, you're going to be able to get them pivoting you more of those conversations that may have been turned away previously.
I love that. Without giving any private information, could you share a story with us of an example of somebody who came to you not necessarily looking for a closed-end second, but was shocked by the debt relief that it gave them with the second mortgage product?
Yeah, so we have a lot of our clients are repeat clients, and a lot of our book of business too kind of focuses around a lot of investing too. And so a lot of what I think a lot of brokers do really well is strategizing, being a financial counselor, right? Instead of just maybe a bank, you're walking in and just being offered these products and not really given the full picture of what the strategy looks like for your financial picture long term. And so there was a situation, a borrower that came to us. He's been a repeat client, so we know him. He was playing around with the idea of a HELOC, and it actually originally came from the Credit Karma app, right? He goes on there and all the time he's told how he's pre-approved for all these things and here are the interest rates and all. And thank God we stay in front of our client base pretty well to where he's seeing these advertisements, but then he's coming to us being like, what do these mean? And what potentially, like, let's look at a HELOC, because I feel like that's a very just standard word. Even when people are talking about seconds, they'll reference HELOCs. And so, he comes to us and we look and he has about, I don't know, I would say, upwards of almost $3,000 going out of this unsecured and some secured debt through installment loans, about almost $3,000 going out a month, right? And has tons of equity and multiple properties that he owns. And so, of course, the first question is, hey, let's talk about what this means for you as a whole. All of this untapped equity, like Tony was talking about, is so borrowers just don't know. And so we were able to do a closed-end second for him, and we reduced his monthly liability from $3,000 to $700 a month. So when you think about that in the real terms of someone that has 3 children, 1 on the way, and we just freed up that amount of monthly income for him, it was definitely like, I can even feel my shoulders drop. It felt like that when we closed the loan, like, a breath
Yes.
of air. And then moving forward, now he is even more aware, like, hey, not only do I have all this real estate, but I have this ability to essentially almost be my own bank. So if I want to do or make financial moves in the future, I don't necessarily need to look at these high interest rate products. I can be looking closer to home with the assets that I already own.
That's so great. And what a great segue to our next slide, which is all about closed-end seconds versus HELOCs. So when a borrower comes to you and just says, hey, Jordan, I want a HELOC, or do you even start presenting the option of a second product? Do you say the word HELOC just because that is such an industry norm?
Mm-hmm. I will be honest, I used to. Does that count?
It counts. It counts. You're reformed.
I think a lot of this job is learn on the job, right? So that's
Yeah,
why I love our brokerage community, our amazing lenders, because we all learn from each other, right? And
absolutely.
I used to use the term HELOC all the time. And it wasn't until probably a few years ago where I had people that very lovingly swooped me up within our brokerage and were like, okay, let's, we have a lot of training stuff in-house, but, I think HELOCs are great. I personally have one on my duplex. It sits there and does nothing, and that's exactly what I want it to do. But it's there if I need it. I think the biggest thing with identifying is really just explaining the difference, right? There's this draw period, the variable rate for a HELOC, and then really, I think instead of talking about the products, I think as a broker, you're trying to identify the thing, right? What is the thing that they're trying to accomplish? Or what's the thing that they're trying to do? Are they trying to consolidate debt, like Tony said? Are they trying to purchase a property in Talkeetna that doesn't have plumbing, right? So we can't do traditional financing. We were just talking about that this morning. So really it's not so much talking about the products, it's more just having a conversation with your hey, what are your goals? What are you looking towards? Because you have so much equity here, but there's multiple different products. And most of the time, people already know the thing that they want. We all know the thing that we want, right?
Right.
We want the extended deck, and then we want to put a hot tub on there, or whatever it may be. And so really, most clients that know the thing, the closed-end second is going to be the benefit to them, right? Because they don't need that draw period. I found that when, we're having conversations with borrowers too about variable rates versus this surety that comes from a fixed rate, more and more people are leaning towards the comfort that comes from a fixed rate rather than the variable rate as well. And if they already know the thing that they're doing it for, it just makes more sense. And so oftentimes, I'd say about 90% of the time when people are coming to me for a HELOC or even just talking about their equity, they're talking about a closed-end second, not a HELOC. And so really it's an opportunity to educate as well. And a quick, small conversation makes you feel so much better because you've educated them, but then also it pulls you into it to educate yourself more about those products. And I think that's very important in this community.
No, I absolutely love that. And borrowers who just want something just sitting out there, not using it, just for a safety net, a HELOC product can be great. But most of the time, borrowers are coming to you because, like you say, they do have a purpose and they need that money. And then just having the security of a fixed mortgage, because we do offer the 30, 20, and 15-year fully amortized, they're paying it to principal. And sometimes I've even seen it where they come and they want to refi that HELOC because the adjustment period starts coming and they're like, what am I doing? If they're at their max draw. So we just actually refi that HELOC and take them right into a fixed product. So I
And a lot
love
of
that.
like that get the HELOCs, they're maxed out anyways, right? So
Immediately.
they had a purpose. They had a purpose for
Yes.
it. And so, we can refinance those down the road too as the market shifts and changes. There are the same opportunities. But yeah, you're absolutely right. It's funny. We're like, oh, and then we're gonna max it out. It's like, well, maybe this product would have been better as fixed, amortized. You have that surety of that payment every single month and that peace of mind that this is what it's going to be.
Exactly, exactly. So once we've established the difference between a closed-end second and a HELOC, into the next slide, you're recognizing the benefits of the closed-end second opportunity. So most of the time, our borrowers telling you, I don't want to lose my 3% rate because they're just fixated on that. Or do you have any other examples of borrowers who are really choosing the closed end second over the HELOC? Just trying to help all of the listeners online here right now think about the current calls that they're receiving, their current database, and how they can really zero in on those conversations.
Well, I think the biggest thing too is that if you're waiting for borrowers to come to you over a product that they probably don't know that exists, you may be waiting for a while, right? You may get like a few calls a month, don't get me wrong, absolutely. Slavic and our team does really, really, I saw this slide and it got me all excited because I was like, oh my God, our team would have loved to make like email drips out of every single one of the borrower says taglines, right? And that's a lot of what we have found success in. If we're educating our borrowers on the products that we offer, you will have people coming to you to have those conversations. You just have to be ready to make those conversations. So I'm sure a lot of brokers have the ability, and if you don't, love to touch base with you afterwards about what we do at First Rate. But we have a system that allows us to make drip campaigns, right? And, I really do think each and every one of these could be a drip campaign to your current database, right? That just says, hey, I don't want to refinance my 3% mortgage. That's the tagline. Like, get them in,
Yeah.
get them to read the email. And then from there, you can start educating your clients that maybe do feel trapped in their current home and can't make any moves, and then start educating them about the products that you offer. And maybe it is a HELOC conversation. Maybe they don't have a thing in mind. Maybe they're super happy with where they're at, but maybe they do want something for peace of mind. Then absolutely get a HELOC conversation out of there so that they're not putting any emergency expenses on high price credit cards. But I definitely think that we are in an era of so much technological help that can help us with just a few minutes of putting together an email drip campaign or a quick video online or something that is pushing your education out there. That's how you're going to get up above the local banks and things like that. Because if they don't know that we offer these products, they don't even know what they are. They're not going to come to you, or that maybe they do come to you and they're like, hey, can you do anything for me? Like I had a client who was separating his parents' estate with his brothers, and he wanted to buy them out of their equity stake in their Arizona house, and he didn't want to go through the process of having to deal with anything in Arizona. I was like, well, great, you already have. He's like, so what can you do for me? Like I think he was talking about I can't even remember the term that he used. You can tell he chat GBT'd it, right? And I was like, very simple, like, hey, do you have your property up here, right? And he's like, yeah, it's almost it's not paid off yet. And I was like, perfect. Let's take a peek.
Yes.
So we 100% went down that hole, right? And so that is an opportunity where clients are coming to me. And the only reason why that client came to me is because, my presence on social media, they know that I'm a mortgage broker. They know that I work in finance. And so when they have those questions, I'm top of mind. So I really think the biggest thing as a broker is just to be top of mind, and not just with VA, FHA, and conventional, but with these secondary products to really show that you have a big toolkit that you can come to when you need solutions to those types of problems.
I love that. I love that. And your borrower that we closed a closed-end second for the process of submitting to you, and I think we even had an AVM. And was he just completely shocked at the entire process and the product at the end?
Yeah, absolutely. So I'm going to skip a little bit to like David's segment too, because
Yes, I
he's
was segmenting to David right now.
the
Okay.
operator
Awesome.
back and forth. It was actually so special because it was a client that reached out to me on social media and through a friend saying, "Hey, I'm going to connect you with a friend that's trying to do this complicated process," right? Because a lot of times too, I think that we forget that to borrowers, this is very high level stuff. And so simplifying this is very beneficial. And, he came to us, I had it submitted, I think in 2 weeks we had it recorded. And this was around the time that Newrez had switched your guys' process to the automated. I don't like the word automated for some reason. I want to say in-house. Like I give it to you guys in your loving care and you guys finish the
Yes,
process
I
for
like it.
rest process.
um, and it closed in 2 weeks, and then the borrower sent me flowers, and I was like, I feel like I need to send these flowers to Newrez. They loved the non-complicated process. It was very smooth. In Alaska, it's always interesting whether we're going to get an AVM back, just because of the area that we live in is a little bit more rural. And, there is some limitations with any AVM system, regardless of the lender. And so, but so far, my experiences have been great with that. We've gotten to avoid a ton of fees that you would usually see on a cash out refinance or a HELOC. And so not only is the process very smooth, but it's also a lot more financially effective as well for the borrower if it's the right situation.
I love that. And
One
David,
second,
who
one
runs our
second, Lori. I'm sorry, I'm going to
yes.
butt in here, and it's very rude, but I'm somewhat embarrassed. Thank goodness for Charles and a few other people now. We do have a question and answer section, and
Oh,
that's why Dana was kind enough to join us today because she is our expert. If you have questions, we may have to do a little bit of rapid fire now, but please put them in the question and answer section, and one of us will get to it. And yes, we will provide this deck to all participants after the webinar concludes.
They all want to do a drip campaign with the borrower says. Jordan, that was a wonderful idea. I loved it. Well, I will transition it over to David, also known as Coop, who runs our Express Closed End Second team and division, to wrap it up and give us why brokers are choosing Newrez.
Sounds good. Lori, thank you. Jordan, thank you. Tony, appreciate the opportunity to participate in, today's thoughtful discussion around our second mortgage process, in particular our operation. So a couple things. I'm David Coop. I'm head of operations here, particularly on the processing and closing side of things. So quickly, our platform, it's built around three key priorities, and those are: how do we close loans faster, reduce unnecessary costs, and really deliver a better borrower experience. So quick cycle times, no cost credit pulls, no cost AVMs were available, electronic closing options, which we hope to expand on a little bit more later in the discussion here, and then, a secure borrower portal. Our goal is to simply make the product easier for all of us, easier for you and the borrowers to navigate, and easier for everyone to execute. So when we look at the operation, we really focus in on three pillars here and built from the pillars on up. So I'll start with our pillar number one: close faster. I know that in our industry, we often broadly talk about closing loans faster. Everybody wants to hear that, but we are executing on that objective. You can see right now that we are averaging 10, 11 days, and that's from approval to clear to close. So we are offering fast cycle times. In addition, we have confident decisions. We're doing no cost AVMs where applicable. And we're also making sure, if you look at the last bullet point there, that when we're having discussions with your borrowers, we're making sure that we continue to showcase our partner front and center so that they understand that the transaction came from you. We're simply doing the heavy lifting after the loan is submitted, but we're always continuing to showcase our broker partner so that this borrower knows that when their experience concludes, they will circle back to you for future refinance opportunities. Quickly, you move over to the lower cost pillar, and you focus in on these three particular things. We have the fewer upfront costs. There's no cost for the soft credit pull. This is a big one, right? The no cost on the AVMs. If you can get your loan to qualify for an AVM, we're going to tell you right up front as you're moving the loan through our automation and blueprint. That will allow you to be able to have a good structured conversation with the borrower, knowing that there's definitely going to be a speed element and they're going to save money. And then lastly, but not certainly not least, if your loan falls below the $250,000, they're going to save some serious money because there's not going to be title insurance. All we are going to do is we're going to do a simple property search from whenever the first mortgage was taken out, and we're going to do that current. And with that, this is going to be an uninsured product, so the borrower doesn't have to take on the burden of title insurance. I move over to the third pillar, which is, borrower experience. And this first one here is something that we're super proud of here at Newrez, and our ability. Hybrid is kind of maybe a scary word at certain points, but basically look at it as an electronic closing. What we want to do is we want to make that in-person signing with the borrower, your borrower, very quick. We limit it to the notarized documents, the mortgage, and the note, because we have to do the note at the table. We take all of the other documents and we will deliver those documents to your borrowers so that they can electronically complete those in advance of the closing, and then make the in-person experience a very short one. As quick as 10 to 15 minutes. Notary is in, notary is out, borrower is certainly, on their way with the rest of their day. But before we get to that, we want to instill in you and the borrower that confidence before they go to closing. So we have a very robust closing call, often 20 to 25 minutes, and we're going to run through all of the expectations. One of the things that I live my operation day to day is surprise avoidance. We don't want the borrower surprised by anything. So we're going to run through all of the loan amount, where the debts that we're paying off, because often these are debt consolidation loans, just all of the idiosyncrasies of the loan. We're going to make sure that the borrower is completely aware of that. Then we're going to deliver the electronic documents to them, and then the notary is going to show up again at a surprise avoidance type of scenario. And then lastly, this is certainly a favorite of mine. It's the secure portal, right? I love when borrowers are working when we're not working. They're handling tasks that they can see through the visibility of our portal, and they're downloading those securely, because everybody certainly wants an air around security, so that we have visibility on our side, transparency, influence the speed, etc. So, when you look at us, it's three pillars, but understand that when you hand it off to us, we continue to keep your name front and center so they understand where the loan originated. We just simply take the heavy lifting and move them through closing. So I was rapid fire. Maybe Jordan wants to maybe jump in on some of the closing side of things, or any other further questions or some additional commentary maybe you choose to opine on.
I love it. Well, so I came from operations before I came into sales, right? So I was in loan processing for 3.5 years with First Rate, working with Newrez. And so I can appreciate everything that you just said. And I know that brokers can too. I think the biggest thing that I noticed in that is right now it's busy, right, for our purchase business. Thank God. And hopefully, right, we have our dips and valleys. And so when we start looking at taking on these new secondary products, it can feel very overwhelming. For us, we have a processing team and a whole operations team that's already a little bit on overdrive. And so when we think about like, okay, now we're going to influx with these new products, it is a little bit intimidating. And so while our brokerage loves to have control over the process so we can help manage the borrower's experience, I do think that Newrez does a phenomenal job at taking that over. I specifically remember a close-end second, David, that we did with you guys, and the borrower had a ton of weird out-of-state appointments, and he was flying all around and all the things. But because he texted me and said something, and I was like, okay, let me call you, because I'm just assuming we're going to have to help with this navigating the closing table like we would any other product, including a HELOC. And next thing you know, I get an email from the Newrez processor that was assisting us, that was assigned to it, and it was just like, yep, we actually already had that conversation with the borrower. I believe what you had mentioned, the closing conversation that was very robust, and I was like, wait, so I don't have to do anything? Okay. It almost felt uncomfortable my first time,
Yeah,
right?
it's a change and it's an adjustment, right? But we want a couple points to highlight there is, we want to have the operations processor on the broker partner side focus on other business while we take that heavy lifting, and to your point, we quarterback the entire closing transaction,
Yeah.
which is talking to the borrower, scheduling with title, taking all of that hassle away
Mhm.
from your operations team, and then we want to just simply come back to you and say, it's scheduled, we're ready to go, and we'll quarterback that side of the transaction and that part to it, because it's right, you want to get to that part of the journey, and that's the most important part, because you're getting ready for closing, and you want to make sure that the borrower is completely aware of everything and ready to go, and that's important to me and that's important to our organization.
Yeah. And I think the question that Charles kind of put in there, like, is it ran like a first mortgage from a broker process full application? Is there a digital portal? I can only speak from my experience. I do know that there is a possibility for us to do a soft pull on the credit, Lori.
There
I
is.
I don't do, I'm doing a full review usually when I'm looking at borrower stuff. And so, that's totally up to you and your broker process, whether you want to pull credit or just allow a soft pull. Um, I'll probably explore soft pulls a little bit more, but in my experience, I'm running it because I'm usually comparing products, right? I'm usually, as a broker, usually that's what we're doing. So I'm pulling them in Arrive, I'm comparing products, and then I'm pricing out Newrez's closed-end second within their system. And then my experience is that once I get in there and my processor registers the loan and submits the actual closed-end second, Newrez completely takes that process from there. You guys let me know whether the AVM is accepted, whether I want to accept the AVM. And if I do, then pretty much I don't hear much other than some automated emails throughout the process. So hopefully that answered some of Charles's question.
Great explanation.
I do want to mention, and we've got a few questions along this line. So why don't we talk a little bit around the total cost of a second mortgage? And I'll start. I'll take the easy part, which there is no lender fees involved. There's no lender fees to go in and hit a fee waiver and have an LLPA added. There's no lender fees at all on our second mortgages. We took care of that when we rolled this product out. Also, when you're comparing price, the price that you get with us, and I would advise compare it to everybody's 30-day price. Ours is automatically a 90-day lock. So you don't have to worry about needing that extension, changing how the high price, which can be impacted a little bit different on closed-end seconds, but you don't have to worry about that 30-day lock expiring. Our price is a 90-day price. Compare that against everybody else's 30-day price when you're pricing it and all the third-party pricing engines out there. It should show up when you select 30-day, but you'll see it's notated not only in our system blueprint, but in third-party pricing engines as a 90-day lock. Lori, Jordan, I'll probably let you handle a little bit along the lines of the title costs or other fees that you see from a second mortgage standpoint.
Or I can jump in too if you want me to, Lori.
That'd
It's
be
up to you.
great.
Yeah, yeah, sure. So I think Tony, if you hit all of the targets, you're going to see big cost savings, and that is AVM. So then we take the burden of the cost of the AVM pull and getting that into our system. So then the borrower saves the appraisal costs depending on your area, 550 to 650 to 700. And then if you hit the next target, which is, under 250,000, then you're eliminating all of the title insurance. And we all know the burden that title insurance brings on to borrowers from a cost perspective. So, those are the two big, high cost items that often hit borrowers. And if you're hitting those particular targets, they will go away. And you're simply looking at, depending on the part of the country that you're in, you're looking at either just a 350, 400 closing fee, and that takes care of everything, which is really the coordination of the notary and things along those lines. But elimination of the AVM, elimination of title insurance, those are big deals and big cost savings when you're talking about borrowers that are typically coming to us, for some type of debt consolidation, getting their debt ratio in line, things along those lines, those costs matter.
Yeah, David, I'm looking at the one that we just did recently, and I think the closing cost on it was over around 120,000, and the closing cost was 2,000, but I'd say 1,500 of that was a buy down. So
Yeah, so
if that,
those for the rate, right? Okay, that makes sense.
right. And it does very much work like that. Obviously, right, buying down the rate a little bit, and there are nice little pockets in that pricing depending. And so looking for those pockets, I think, is also, especially if you're shopping between other lenders, I think was very beneficial. But yeah, the costs are, when you start taking out a $2,000 lender title insurance requirement, that's a big deal. A big deal. So that was a very nice surprise. I did my first one and disclosed all of my standard fees that I would for a HELOC or any other product. And then my loan setup team came back and was like, they deleted like all of that. I'm like, ah, so it's real. It's not a
Yeah,
trick.
for sure.
Awesome function.
Yes, we offer second mortgages down to $50,000, but the opportunity out there with the debt involved or the needs of the borrowers out there, you often find loans up over 200,000, and it is better most of the time to put these second mortgages together on the lender paid transaction, but it depends on the state. I mean, a lot of states you are able to go borrower paid as well, but I'll leave that to the individual state you are in before giving specific advice there.
Well, and keeping too in mind that it may be a lower loan balance, but like we're in a relationship business, right? And so like I can't stress how important it is like to stay top of mind in front of borrowers. And for brokers that may be on the call where maybe your book of business isn't stringed back all the way to COVID with all of these equity rich borrowers, there's so much opportunity. I think I mentioned this the last time we were chatting about how Slavic and on our team, we very cheaply, I'm not sure how everyone's state works a little bit differently, but I'd contact your favorite title agent, whoever that is, or escrow officer, or every states are a little bit different. But most of the time you can purchase a very specific borrower property owner data within whatever area. In our case, we searched a zip code for people that own between, have owned their home for 10 years, their interest rate is this amount, those types of things. And then it can literally be so much as simple as sending a postcard or shooting some type of marketing material that just says, hey, we're here, we're local in your area. That is still very much important to people nowadays. And let's have a conversation, let's talk. And so even if maybe your book of business doesn't go back to those people, there is so much opportunity to be putting yourself in front of people that may not be ready for a refinance and may never be, but you can at least start building your book of business from catching those from 5-6 years ago, and then have that opportunity down the road for purchase and or refinance. So it's really, there's a lot of strategy that you can infinitely build on with these types of secondary products as just being the tool to get in front of clients more.
All right, well, Jordan, thank you so much for joining us today. Lori, Coop, and Dana, thank you so much for participating. We take a lot of pride in our second mortgage Express CES rollout. Trust us with your second mortgages, and I'm sure that will allow us repeat business after giving us a shot there. Couple closing remarks, not necessarily from a second mortgage standpoint, but if you've not seen our marketing that is out there, we recently have rolled out the ability to pull a soft pull and then a hard try pull as well on first mortgages. We just rolled that out a few weeks ago. So that is a true no cost credit report to the loan officer, to the broker. There's a $275 charge at funding, but it allows another reason on how you can save money in doing business with Newrez. And I have an announcement to make. For all those that were able to join today, you're hearing this for the first time. We will roll this out tomorrow, but as of tomorrow, we will have the technical ability to break out the purchase lender paid comp from a refi lender paid comp, if that fits within your model, to have different lender paid opportunities there. And thank you for joining us. Thank you for your business. We appreciate you as partners, and we look forward to seeing you out there in the field.
Thanks, Tony. Thanks, everybody.